Hello investors and traders, today I'll speak about S&P 500 and technical analysis using the Elliott Waves. So let's come back to my previous projection. So in my mind here, this pattern, it's supposed to be expanding in diagonal, the first wave, the second, the third, the fourth and the fifth. So here most probably the fifth wave is going to finish. Actually today we saw a level of 350. Yeah, it was 350 for the index. So it's very close. It's less than 3%. And also I can tell you the target of this fifth wave. And here check, this wave can be also be viewed by here, the first, the second, the third. Usually the third is the biggest wave in impulse, the fourth and the fifth. So my projection, my drawing now is going very well. It was about 1 month ago, but now is totally correct. So now I will tell you the target. Yeah, so actually, yeah, the target is for this the finishing of wave A, it 3404. So it's 2 or 3% till this level. Why here? Because usually in expanding leading diagonal, this wave, the fifth one, at least like the third. So using the Elliott wave theory, of course, it can be measured. So it's very nice and very useful. General speaking, I think the correction here, yeah, it's the wave A, then we might see a bounce B, but of course we will check how the Fed will react, the interest rate, the inflation, and then I'm expecting another move down, even lower than wave A. It can be C, but I'm not sure. Of course, it's not in the near future, but maybe till the end of this year it might be wave B and then maybe C. So this one is my best scenario. It's the scenario I'm already now trading by myself. But here, please check, there is another alternative scenario. Yeah, now I will show you. So in this case, another one, yeah. See, it can be the first wave. Here it was the second, then maybe we will see the third, so it can be lower. It can go lower, and then the fourth and the fifth, something like this. Yeah, in this case I can tell you the target of this finishing of this correction. Yeah, so in this case the wave, the third wave might be here, so 25.15. So it's another move from the current level, about 30%. So I'm not sure it will be the case, it will be the scenario, but it's an alternative one. Why not? Because already what I'm seeing, yeah, the white lines here is the alternative one. Give me a minute, I will delete it. So because already in the weekly time frame it's oversold, so I think that maybe it's time to see a bounce. So then wave B, why B? So here this square, it's my target for wave B, because usually B is 30, using the Fibonacci levels, is 50-60% of wave A. So generally speaking, now I'm expecting that somehow the wave B will start, we might start to see this figure. Let's move to the Nasdaq index. Also it traded at the same direction as S&P 500. We can see very move performance last months, last weeks. So here, as I told you before, we saw this pattern like head and shoulders. So now it's supposed to fall even lower. The next support level is about it's about 10,000. So we'll see. But now I think all the IT companies like Apple, Google, Amazon is looking very weak. Then we have Russell 200 small caps, so also very weak performance. But here please check, because if you will see the monthly chart, so now already traded at the levels of 2000 and September of 2018, major support level. So here I hope it will hold and sustain, and then from this level maybe we can start to bounce. But now even the monthly, their side momentum indicator only for 42, so very weak performance. Now I not sure it's the best point to buy. I'm personally still not buying, I'm just looking. And the DXY index dollar currency, so it's traded now more than 112. So here we had a range, and now we got out from this range. So of course it's dependent by the Fed policy, but the interest rates, how tough they will and how quick they implement the interest tightening. So of course the inflation in US still not coming down, so it's a huge problem. And here let's check the US Treasury government bond yield, the 4% for the 10-year. The second, the two years is now 4.40, so inverted yield curve. So it's signaling that we maybe might be in a recession, or we already in a recession. Anyway, it's very bad sign. So 4%, it's very, we can see from this picture, yeah, from its pattern, that we got out from this declining channel. So the inflation also very high, is more than 8% in the US. So still before we won't see any coming down in the bond market. So the stock market will continue to be under pressure. It's very big problem for us for buying stocks, for investing. But now we see that the bond market and the stock market is really very tough. So if you like this video, subscribe to my channel, press the like button, and see you on the next time. Bye.